Buckle up because we're about to embark on a wild ride through the world of REITs. Today, we're shining the spotlight on a real estate heavyweight that's been making waves and turning heads, Frasers Logistics and Commercial Trust, or as the cool kids call it, FLCT. Now, I know what you're thinking, REITs? Sounds about as exciting as watching paint dry. But trust me, folks, this is one investment opportunity that's going to have you on the edge of your seat. Why, you ask? Well, let me tell you, FLCT's recent performance in the first half of 2024 has sent shockwaves through the financial world, leaving analysts positively giddy with excitement. We're talking about the big guns here: Citi Research, CGS International, DBS Group Research, and OCBC Investment Research. These heavy hitters have been singing FLCT's praises, maintaining their buy and add calls like a broken record. And let me tell you, when the big wigs start jumping up and down like kids in a candy store, you know something juicy is going on. So, what's all the fuss about? Buckle up, my friends, because we're about to dive deep into the nitty-gritty details that have got the analysts all hot and bothered. From jaw-dropping rental reversions to a defensive profile that would make a fortress blush, we're going to unravel the secrets behind FLCT's success and what it could mean for your investment portfolio. Frasers Logistics and AMP, Commercial Trust, also known as FLCT, has recently announced their financial results for the first half of fiscal year 2024. The results have sparked a wave of excitement among financial analysts. This is a significant event in the financial world, as FLCT is a well-known real estate investment trust, REITs, and its performance can have a substantial impact on the market. The results have been met with a positive response from several prominent financial research firms. Citi Research, a leading global investment bank, has maintained its positive stance on FLCT. They have been closely monitoring FLCT's performance and have expressed confidence in the REIT's potential. Similarly, CGS International, a renowned financial services firm, has also given FLCT a favorable rating. They have been impressed by FLCT's performance and see it as a valuable addition to investment portfolios. DBS Group Research, the research arm of DBS Bank, one of the largest banks in Southeast Asia, has also given FLCT a thumbs up. They have been following FLCT's progress closely and believe that it has a promising future. OCBC Investment Research, part of OCBC Bank, another major banking institution in Asia, has also expressed a positive view on FLCT. They believe that FLCT has strong potential and recommend adding it to investment portfolios. In the world of stock market analysis, there are several key players who closely monitor the performance of various stocks and make predictions about their future values. These predictions, known as target prices, represent the value that analysts believe a particular stock could reach in the future. For instance, consider the case of FLCT, a stock that has been under the watchful eyes of several analysts. The majority of these analysts have decided to maintain their initial target prices for FLCT. This means they believe that the stock's value will continue to align with their original predictions. Among these analysts, Citi has set a target price of $1.24 for FLCT. Similarly, CGSI has predicted a slightly higher target price of $1.27. DBS, on the other hand, has the most optimistic outlook, with a target price set at $1.44. However, not all analysts have decided to keep their target prices static. OCBC, for example, has made a minor adjustment to their target price for FLCT. They have reduced it slightly from $1.37 to $1.35. This decision was influenced by a couple of factors. Firstly, FLCT has recently made some acquisitions in Germany. These new investments could potentially impact the company's financial performance and, consequently, its stock value. Secondly, there have been fluctuations in the foreign exchange market, specifically with the Australian dollar weakening against the Singapore dollar. This currency shift could also have implications for FLCT's financial outlook. OCBC remains quite optimistic about FLCT's prospects. When they refer to FLCT's defensive profile, they're essentially likening the company to a robust fortress capable of withstanding turbulent market conditions. This is a metaphor used in the financial world to describe a company that has strong fundamentals and can therefore resist economic downturns. A defensive profile is typically characterized by a few key attributes. Firstly, such a company often has a significant portion of its properties rented out. This provides a steady stream of income, which can help buffer against any potential market volatility. In the case of FLCT, it has managed to secure tenants for a large number of its properties, which is a positive sign. Secondly, a healthy bank balance is another hallmark of a defensive profile. Companies with strong cash reserves are better equipped to navigate through challenging economic times. They have the financial flexibility to invest in growth opportunities, pay down debt, or weather periods of lower revenue. FLCT's healthy bank balance indicates that it is in a strong financial position. Lastly, long-term leases are another characteristic of a defensive profile. These leases provide a predictable and stable source of revenue for an extended period. They also reduce the risk of income fluctuations due to vacancies. FLCT's long-term leases suggest that it has a reliable income stream for the foreseeable future. In summary, OCBC's enthusiasm about FLCT stems from its defensive profile, which is characterized by high occupancy rates, a healthy bank balance, and long-term leases. These factors make FLCT a potentially resilient investment in the face of market uncertainties. Most of these analysts are keeping their target prices the same. That's the price they think FLCT shares could reach. Citi's got it at $1.24, CGSI at $1.27, and DBS at $1.44. OCBC did lower their target price a tiny bit from $1.37 to $1.35 though. Why? Well, they factored in FLCT's recent buys in Germany and the Australian dollar getting a bit weaker compared to the Singapore dollar. But hey, OCBC is still pumped about FLCT. They're talking about its defensive profile. In simple terms, that means FLCT is like a sturdy castle that can weather stormy markets. FLCT's also got a lot of its properties rented out, a healthy bank balance, and leases that are going to last a long time. Now, let's talk numbers. FLCT's DPU, or the money it dishes out to investors per unit, dipped by 1.1% compared to the same time last year. But don't worry, this was expected. The good news? FLCT's been able to get way better rental rates when leases come up for renewal. We're talking a whopping 18.3% increase on average for the first half of 2024. Analysts are also excited about FLCT's plans to spruce up its properties and take on new projects. They think this will be the cherry on top of the REITs' growth sundae, along with buying up more properties. When it comes to understanding the financial performance of a company like FLCT, it's crucial to delve into the numbers. One key metric to consider is the distribution per unit, DPU, which is essentially the amount of money that the company distributes to its investors for each unit they hold. In the case of FLCT, there has been a slight decrease in the DPU by 1.1% compared to the same period last year. While this might initially seem concerning, it's important to note that this dip was anticipated. Financial markets are complex and fluctuations are part and parcel of the investment journey. However, there's a silver lining to this scenario. FLCT has been successful in negotiating significantly better rental rates when its leases come up for renewal. This is a positive development as it indicates the company's ability to maximize its revenue from its properties. In fact, the increase in rental rates has been quite substantial. For the first half of 2024, FLCT has reported an impressive average increase of 18.3% in rental rates. This is a strong indicator of the company's robust negotiation strategies and the high demand for its properties. Analysts are also excited about FLCT's plans to spruce up its properties and take on new projects. They think this will be the cherry on top of the REITs' growth sundae, along with buying up more properties. Alright, Iguana Nation, that's a wrap. Today, we've seen how FLCT has been making waves in the REITs world, impressing analysts left and right with its stellar performance in the first half of 2024. From its defensive qualities to its potential for growth, FLCT is looking like a pretty sweet deal. But hey, don't just take my word for it. Always do your own research and think about your personal financial goals before making any investment decisions. If you found this video helpful, give it a big thumbs up and don't forget to subscribe to the Investing Iguana channel for more bite-sized bits of financial wisdom. Until next time, stay savvy and keep on investing.